let's move on and talk about Fedbank Financial Services. The IPO is ongoing 22nd of November to 24th of November for subscription. It is open for subscription, and day 2 as of now also. Yes, what we're seeing is the subscription coming in as of 12 o'clock is 0.5 times in terms of the subscription. So let's bring on board Anil Kothuri, who's the MD and CEO at Fedbank Financial Services. Thank you so much, Anil, for joining in with us this afternoon on ET Now. It's always a pleasure talking to you. Anil, I'm going to start by talking about, what we've spoken about in the before interviews as well was in terms of obviously the book, your loan book. You were saying that, 86% of it, I believe, 86 approximately of the portfolio is actually something that is backed by the assets for the company. So now, one, in terms of, where do you see this target going up as per you? Do you expect this to be at these levels in terms of the secured loan book? Or, maybe this number could be varied going forward and could maybe see a bit of a reduction?
So, hi. We are in business to empower emerging India with easy access to loans. We serve the small self-employed customer for his working capital requirements. We do that against pledge of gold, mortgage of property, and we do unsecured. Our unsecured book is about 14% of the overall portfolio, but it has the lowest behavioral tenor in that unsecured loans get repaid within 30 months, as opposed to secured mortgage loans, which get repaid in about 8 years. So which is why with each passing month, the proportion of secured loans in the portfolio keeps increasing. So this 14% that you see will keep coming down with the passage of time, and we will move to becoming a greater and greater proportion of secured assets in our book.
Sure, but Anil, since you're talking about unsecured being almost 14% of your book, this RBI's latest circular and of course the latest commentary which has been raising red flag, what would be your response to that, and what does it do to your cost of funding, to your ROEs?
So first up, the Reserve Bank's intent is to clamp down on unsecured lending, which is used to fuel consumption. And that's what they seek to moderate and put guardrails around. The loans that we do are loans for working capital for self-employed customers. To the best of my understanding, that's outside the ambit of the circular that the RBI has recently issued. Almost all the loans that we do in FedFina qualify for priority sector lending by banks. So therefore, they're a preferred segment for banks. Banks purchase our portfolios. We have 12% of our AUM off book. And therefore, whatever we borrow from banks is for onward lending for priority sector. So given this, we expect a muted impact of the RBI circular on our operations, if any at all.
Right. Anil, also, in terms of AUM growth, that's growing at around 30%. And your NPA ratio, when I look at it, that is also quite low, which is a positive given that the AUM growth you've been seeing for the NBFC as a company. Are you confident to deliver this low NPAs in the period going forward as well then?
We've gone through over the past 5 years. We've had 2 years of COVID, which has ravaged the country, and the small self-employed customer has borne the brunt of it. Our customers are all part of what we call essential services, which means it's part of the daily social fabric of the little cities or towns that they live in. And during the 2 years of COVID, they were forced to keep their businesses shut, and the logistics of that impaired free movement of people actually impaired their business. So the past that we've gone through has been very stressful for this segment, and the future really should be a lot brighter, is what I would think.
Sir, thank you so much for making time and speaking with us. A short conversation today because a lot is happening in the market. Would have otherwise loved to chat more. But thank you so much for making time, and all the best for the IPO as well.